Welcome to Market Movers. I'm Jim Urio with Scott and Mark.
Hi, Jim.
Okay, so Scott, the government, the administration released its 2021 budget. Wasn't really much of a surprise. They seem to want to spend quite a bit of money. It looks like deficits and debts will blow out a little bit. Does the market care, particularly things like gold and the dollar?
You're telling me you're talking about governments spending money, Jim. Listen, right now it doesn't appear that the markets care too much because they probably expected these figures, and with interest rates very stable and very low, I feel like it's just going to keep on going when it comes to debt financing.
Okay, when you're looking at an asset like gold, is it more, what's a greater headline? The government spending a lot and increasing the debt, the Fed being easy, maybe more easy than they should, or global headline risk, i.e. the virus?
Some of it short term, some of it long. Short term, certainly the virus. I mean, as the virus cases spike, that does seem to give a little bit of a lift to gold. But longer term, Jim, I believe it's the Fed. I think a dovish Fed sets up perfectly for at least some levitation in gold because of the support the Fed is providing.
I like it. Before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. Scott?
Yeah, Jim. So we talked about the Fed. It's kind of a longer term view on gold. And I believe also kind of a view on gold today that was interesting about how gold and GC reacted to some of the comments that we saw out of Fed Chairman Jerome Powell this morning with respect to maybe being a little less dovish, Jim, when it came to kind of their process this year going into the election. So as an example, Jim, I found something interesting out there, looking at buying the 1575, 1550 put spread in GC for 4.5 ticks. Sounds like a pretty decent trade expression, doesn't it, Jim? But I want to pay for this as usual because I'm just inherently cheap when I want to put on these trades. So when expecting that put spread I want to put on, I actually want to sell a 1600 GC call for 4.5 ticks, making my trade cost zero with the potential to make 250 if the put spread fills out, but with the risk of getting short GC at 1600 if we have that breakout above, which I see as some pretty solid upward resistance in the name.
I do too. Every time you put out a trade like this, I remind people that getting short at $1,600 in a inherently risk-off asset and sometimes a safe haven asset that people flock to in times of panic. I don't like that prospects. That being said, you've done this a few times and they always seem to work pretty well. And 1600 is a decent level.
And I should have mentioned, I'm keeping this relatively short term with an expiration of February 28th, so there's not a ton of time for things to, let's say, go wrong to where GC could get that big of a pop.
Okay, so if you're comfortable being short there, then I don't have a problem with the trade. I, on the other hand, think gold is going higher. So I'm looking at the week 4 Feb, that's the February 28th expiry.
Same expiration,
yes,
got it.
It's a call fly. Sometimes I give unequal call flies. This one is a standard call fly, which is buying the 1580 1600 call spread, 20 tick wide call spread, and then selling the 1600 1620 call spread to help finance it. You can buy that for 2.5 ticks. So it risks $250 to make a potential 1750. Now, when you put on these call flies, regular call flies, you don't expect to hit it right on the head. You know what I mean? These are things that we manage. If you double your money, if you triple your money, you look to roll it into another fly. Usually, do you like it? I know you don't like the direction.
I don't like the direction, but the levels are interesting in the sense that 1600 level is a pretty neat line in the sand when it comes to GC. So with respect to how I expressed my expression there, to be redundant, it at least looks at GC at some levels that I believe are very kind of critical as we go into the end of the month and the fallout from the Fed today.
You mentioned that the Fed sounded a little dovish today. Does the market believe him? Does the market not believe him?
Well, the market doesn't believe him so far because Fed Fund futures barely budged. But as more data comes in, as we get closer to the election, I think the Fed is going to prove their hand true.
Thanks for joining us in Market Movers. I'm Jim Urio, where we are helping to make you a better trader.